Here's something that may surprise a lot of people. We're talking about fees. Yes, the same fees that result in revenues for investment advisors are really costs to you. Most investors are not aware of how much they are paying, but fees can make a significant difference in the growth of your assets and can make a huge difference in when you can comfortably retire. There might be fees that go to your financial advisor, fees to the broker, fees for transactions and commissions, money management fees, and mutual fund fees from sales and marketing. You probably pay some of these fees, but when you add them up together, you might be surprised that it could be in the ballpark of 2 to 3% annually. Now, if an institution is charging you fees in this range, they better be doing a bang-up job in managing your money and beating the market averages. But often, this is not the case. At Hayes Investment, we understand the long-term benefit to our clients of keeping their fees down. We have a flat fee that maxes out at 1% annually. While there are some transaction charges in addition to the 1%, our broker, Charles Schwab, is the original discount broker, and it's rare that total fees paid out will exceed 1.25% in any given year. Now let's compare how your assets will grow when paying 1.25% versus paying 2.5% in fees over 30 years. In this hypothetical example, we have a 35-year-old with $250,000 from a 401k she'd like to roll over to an IRA. Assuming both scenarios above, let's say that each money manager is able to achieve an average return of 8% annually for 30 years. In scenario number 1, with 2.5% in total fees, which doesn't really sound like a lot, the account balance after 30 years would grow to $1.177 million, and the total fees she would have paid would have been $472,000. Now let's look at scenario number 2 with 1.25% fees and the same 8% annual return. Total fees paid after 30 years would be $299,000, but her total IRA balance would now be over $1.724 million, a difference of $547,000 more than if she used the flashier financial advisor charging the higher fees. Now, it's possible the higher priced advisors will generate higher returns, but that's not always the case. So do your research, and unless you see a legitimate track record that gives you confidence in their ability to drive higher returns, frugality usually makes sense in investing, and it can have a huge impact on your retirement planning, your retirement date, and your quality of life in retirement. If you'd like to get a free portfolio review or have us look over what your total fees you're currently paying for your investments, please contact us using the information on the screen below. Just remember, watch those fees closely. It matters.